Hello, good day. My name is Ziad Aldabag and I am a Forex Optimum financial analyst. The access for cheap money for investors due to the zeroing interest rates by the US Federal Reserve for at least next 18 months will negatively affect the dollar as large flows of a liquidity will surpass government bonds, yields and lower the demand for safe haven assets. Well, on the positive side, there's a good news that stock markets would benefit from it and it likely to continue climbing higher. Why? Because when there is a speculation of lower interest rates, it makes the borrowing cost cheaper for the companies, right? So for better expansion of the businesses, we will see that it will be good for the stock market. Why? Because you will have to pay lower interest rates to the bank while they will be borrowing the cash flow. Now, this scenario leaves a bullish forecast for S&P 500 in place. Huge amounts of liquidity will be pumped into the stock market as we may expect the index will renew its 2019 highs. The yield curve for the US Treasury bills begin to lower down amid fears of longer than expected US economy. A dismay yawned by Fed Chair Jerome Powell that came up with frustrating economic perspectives on Thursday borrowed beat markets but inspired investors to pick up US Treasuries after the yields soared last week. Similarly, is the gold as it approaches its maximum of 1765.3 per troy ounce. The upward trend for the bullion indicates that a breakthrough of this level is quite possible in the near term despite rising an appetite for risk. Well, yield on 5-year T-bills are expected to remain at the current level and we should not expect them to fall much further. Gold is taking over treasuries as the primary safe haven asset as well. Looking ahead on the Brent crude this week reached a 2-month high at $43.41 per barrel. However, a correction has followed. The corrections potentially may top about 15% in average, with crude oil sliding to the $37 to $38 area. We do not see any fundamental reasons for any deeper fall for the time being. So after the correction is over, the rise in crude prices may resume. This rise is nudged by the OPEC plus production cuts extended for July last weekend. Saudi Arabia said that it will raise prices on all crude for all regions, thus resetting chances for a new price war in the oil market. Finally, the rising demand for oil is supporting prices. Well, China has also increased oil imports in May by 19.2% to a record 11.34 million barrels per day. Chinese companies are also pushing to replenish their crude reserves ahead of climbing prices. And we cannot exclude the demand for oil from China will remain high at these levels even in June, right? So we should say pay a special attention to the looking forward index for the release, including consumer sentiment for the US, and we may expect a sharp rise in consumer confidence. That's all for today, and thank you very much. I'll be seeing you guys once again. Bye bye.